Hello, D traders. Happy Saturday. In this video, I would like to address two different client questions I have received. So the one comment was from someone saying, "Can you please summarize the entry rules for different setups?" I've done that before, but here I will do it again for four distinct, very common trade setups. And secondly, someone else said, can you comment more on the dump money crosses, so the net dump money crosses of the squeeze lines? And also in that context, can you comment on the timing of those? So let me first address the first question. And I've made these very simple drawings here in Paint. So first of all, let's talk about the so-called 4-hour reversal. Okay, we have seen it many times. And by the way, all these four setups I'm showing now, you can go to the MK blog and see countless examples for each. Okay, that would be a nice homework for you as well. So I will simplify here a little bit. Okay. So this is just really like a very, very general overview. Okay, quick and dirty, so to speak. So we see that often, yeah? So on the 4-hour time frame, the price kisses or clears the upper 4-hour band. Okay, often it clears a high also on the 4-hour chart. And then there's some kind of retest. And then what happens? We have this, the dumb money switch, okay? Plus a collapse in the squeeze line if there was a squeeze. So that's essential, yeah? So what's happening? The smart money cleared the high, cleared the stops, retested the high. So therefore, shorties are kicked out of the market and leaving the market. This translates into a downward sloping squeeze line, okay? This is necessary. Do not take this trade if there's an upward sloping squeeze line, okay? Never trade against the squeeze. So the squeeze line needs to be downward sloping, and you need to have some kind of dumb money switch. So from shorties to longies, all right? So those four particular entry conditions would be the base case, okay? So dumb money switch from shorties to longies, shorties leaving the market, there's no squeeze power in the way, plus often a high or low has been cleared, plus a little retest. Those four conditions. Now, are there variations? Yes, of course. Sometimes you may attempt to take a 4-hour trade without a very significant dumb money switch, for example. Okay, there are cases where some of those four conditions may not be met, but there's still some tradability. But obviously, you need to decrease the leverage then, yeah? So that's a very, very basic, simple case, okay? We see that over and over again, many examples on this channel, all right? Shouldn't be anything new, okay? Right. Let's go to the next example. So here we have an example for a typical squeeze trade, okay? So the squeeze line is upward sloping. Here the shorties are coming into the market, all right? And then the newest money flow is also short. So that means overall the shorties are dominating the market, and you see that over days sometimes with an upward sloping squeeze line. And then the newest money flow is also short. Okay, so those position bars will fuel this squeeze. In that case, you can buy even expensively into the market, like here, okay? This is not a cheap entry. However, because you're trading in the correct direction of an ongoing emerging squeeze, you can take this trade. And if you did this last week, you made a lot of pips, as you know, okay? We've seen that many times. So emerging squeeze and new shorties high on the scale are coming into the market. You can buy expensively and get yourself positioned into that squeeze scenario. And often, as we know, this can lead to an exaggerated up move, okay? Look at the last, the video, the MK summary, the MK block summary I made yesterday. Look at pound yen, okay, euro yen, Australian dollar, you see exactly this squeeze setup. Okay? So you're taking the opposite trade of the dumb money in a scenario where already you know that you are on the side of the squeeze. In very, very rare cases, okay, there at some point is a dumb money switch, okay, and then long is coming again and shorties leave, and this collapses, and then you need to get out. Very rarely, okay? So most of the time you can write this like here, okay? Right, next one. Let's talk about the typical MTS scenario on the 1 hour chart. We have seen that also many times. Okay, we are here, and then there is this medium term stop in a range above the price on the 1 hour chart, and we know it's going to get taken. And you look just for a good entry, like let's say some shorties come in. Doesn't need to be a squeeze, but some shorties are coming in, and then you find a reasonable entry like here quite cheaply into the market towards the clear target. And here you put your TP. All right. Now, sometimes you may be late because, you know, and it can be still tradable. All right. Even the price came already. If you see where it's going to go, it can be tradable. Beginners should rather trade a little late than early. Okay. The more advanced you are, the more you may try to get an early entry or a cheap entry. But that's only if you have experience, okay, and you have screen time with the market causality, all right? Now, guess what? If you have the 4 hour reversal scenario that I've shown before, and on the 1 hour chart you have an MTS in the same direction, yeah, let's say there's a 4 hour reversal up on the 4 hour chart, so we have a dumb money switch from shorties to from longies to shorties, and the price is at the lower band of the 4 hour chart, and then on the 1 hour chart here above the price you have a nice inner range stop. So you have 4 hour energy plus an inner range target. That's a good setup. We've seen that, okay, I think 2 weeks ago we had several trades like that. That's a good high bias trade, okay? With a clear target in the right direction on the higher time frame. Okay? Now the number 4 setup is similar, but it is a option strike target. We've seen it many times. So 1 hour chart, let's say, so we have this option strike target. So remember, we do not take those trades if a squeeze is in the way. So if the red line would be here, we are not shorting it. But in this case, the squeeze is not in the way. So we can sell towards the lower option strike target as we've seen many times before. Yeah. And we take profit spread above this target, for example. Yeah. Nice short trade. Now again, if you have been late or something, it can be still tradable. Okay. Just make sure that if you're too late, you may need to skip the trade, because look, if you try to short here, you need to have a reasonable risk return also. If you want to place your own stop here and the target here, it's not a great risk return. Okay, so sometimes if you missed it, you need to skip it also. Okay. This can be a nice trade setup. Again, if you have a 4 reversal down on the high time frame, and then suddenly you also have a option strike target down like here, this again makes the trade, of course, higher in value. You can risk more. Okay? It's not rocket science. Now, I suggest every one of you to go through the last 20 MK block summary videos, and with just those 4 main setups to analyze all the trades and predictions I have posted live and in the videos, okay? Now, this is all quite simplified. So in reality, sometimes things can be a bit more complex. For example, let's say sometimes we have, let's say there's an order gap zone. Let's go through this. So let's say you are thinking about selling here, but on the chart there's actually an order gap zone above the price, yes? So in that case, of course, you need to deduct that points from the quality of the setup, because there can be, like here, an up move to fill the order gap zone before the 4 reversal comes. Yeah. So all the factors we know about are relevant always. So it's a little bit of discretion to go through your checklist, and in the forum you find some examples. Okay, every trade has some plus points, some minus points, but it's no rocket science. All right. It's always about the dumb money positions, the overall bias in the market. Okay, where's the price on the higher time frames, and what do we see in the 1 hour chart, for example, on the lower time frames and in the M30. All right. You just need to be accurate when it comes to analysis and have a little bit of feel for the quality of the setup. It's not difficult. Okay, if, for example, if you just say I never trade against the squeeze lines and you use that as a meter filter, you will do much better. Never trade against any squeeze lines. So that means if for whatever reason you think you should sell here because there's an order gap zone here on the 1 hour chart, if you see that there's like an upward sloping squeeze line on the 4 hour chart, do not take this trade. All right? This is not complex, is it? Because then if you sell here, you're selling into the dumb money side, okay? You're going on the side of the dumb money, so you will get squeezed out. Never ever do that, okay? The cardinal sin is to trade against an ongoing squeeze. If you try to sell here, 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 this is all very bad trading. This is what the dumb money does, okay? Do not attempt to sell into a squeeze like this. You need to be on the other side and ride this squeeze, okay? However, as we know, like every week is different. So now we're the squeeze week, and we will come back to for our reversal weeks where we have more dumb money switches and more collapses, and then the price is even more rangy on the forward chart. And on the lower time frames, it goes for order gap zones and MTS, okay, rather than running to some level like we saw. And like most of the time, we have some kind of 4 hour reversal energy going on. Sorry. And then occasionally, for after a few weeks, we have a big squeeze mode where the market gets cleared out. After that, it's a bit empty again, and the whole thing repeats. It's really like the switch between squeeze modes and 4 hour reversals, which allows the smart money to change from ranging to trending markets and to take out traders on all sides of the spectrum, which is really fascinating. And here you understand how they play this, okay? This is the only way for you to see behind the curtain how this is played and why, and to see that live, okay? I can only emphasize that. There's no other place anywhere on the internet, in the public, where you can see that and see the causality, all right? That's why I call it causality. That the dumb money switches and then the price reacts, all right? That the dumb money is on one side and the smart money just goes for them and takes them out, all right? That then with range mode, the dumb money just plays Pac-Man and fills like order gap zones and medium-term stops in a range, and by the pip often takes it and goes the other way again, all right? So many examples you can see. And of course, when there's a squeeze, you also need to consider the day charts, right? The moving averages, they like to clear them. They like to go for a long-term stops. So, that's another thing I should mention here. So if you have seen that, like now, like the markets have been in squeeze modes, pay attention also on day charts, yeah, where we have the moving averages, and pay attention to the tendency for the smart money to actually clear, okay, moving averages on the day chart, all right, long-term stops, the pink ones, because that's something they can't do every week, all right? So you can see like long-term stop runs even now in different pairs. Watch the MK block summary I made yesterday, okay? So I hope this is clear. So these are 4 distinct setups which you see over and over again. Again, there can be combinations like a 4 reversal with a inner range, medium term stop run, etc. But it's always about these factors. Okay, now let's talk about the second question. If avoiding trades and yeah, all right. Okay, that's something I would like to elaborate on. So again, as you can see, what's happening is the squeezes are really important, so you have to pay attention to them, right? As I've said many times before, if you see a squeeze mode, yeah, the timing is not the most dominant factor for your trading. What does it mean? It means whether you enter in a squeeze here, okay, or here, or here, or here, okay, is not a massive difference as long as you caught a proper squeeze and it goes for the targets, the LTS and so on. Of course, if the earlier you entered, the more pips you will get. But I mean, in terms of placing a good trade or a bad trade, like all of those 4 trades, will be profitable, as you can see. Yeah, because they're in the direction of, like in the direction of the squeeze against the dumb money shorties. Okay, so we see the squeeze represented by this upward sloping red line. All right, showing that there will be an up move. Okay, this can go over days, sometimes weeks. Now, sometimes the market is a little bit more, I wouldn't say whipsawy, but it has more dumb money switches, all right? And that's most of the time, actually, as I've said before. So there we see 4-hour reversal after 4-hour reversal after 4-hour reversal, okay? So we see that, the market is in this kind of range, and then, look, the shorty line collapses, 4-hour reversal down. The longy line collapses, longies are kicked out, leaving the market, boom, 4-hour reversal up. You see? So that's a certain rhythm of the market. Again, this is quite slow. We're talking like in terms of days. Of course, sometimes within 2 hours you have a proper 4-hour reversal emerging. That happens sometimes. The same with squeezes. Within 2 hours, sometimes a big squeeze grows and just, pushes the market like you saw. So it's not super slow always. That's not what I'm saying. Like, that's why it's important to always have an eye on the market, because these scenarios can emerge. And if you're not at the screen, you may miss certain moves. It happens to me too, as you know. The best thing is to have an eye on the market. Because, like the market structure can change always. Even though sometimes it stays in a mode for a while, right? So if you're trading higher time frames, be aware of that. So I just would like to explain the following so that people understand that, all right? That's how you should read the net dumb money indicator with the squeeze lines. Okay, we have this middle line. Now sometimes you see that both squeeze lines move around it, okay, or even stay below it, all right? So when that happens, it means the market is empty, right? There's not much dumb money in the market. No side dominates, and that means what? Range. Often in these modes, we see 4-hour reversals after 4-hour reversal. And at some point, what happens? One of the 2 lines dominates, like here, the shorty line suddenly goes up and goes in the squeeze mode, and a big up move is the result. Okay? Now, obviously, this doesn't go forever. At some point, the squeeze line collapses again because shorties got kicked out. The price went too far and even took the stop switcher far away and gave some people margin calls because they didn't expect the price to go so far against them and they had no stops in place. So shorties are leaving, and guess what? Then once the squeeze is dying again, of course, the market normalizes again, right? So that's when the trend ends. Yeah, so that's important to understand. I would say, like, from week to week, I would say on average every 2-3 weeks the mode changes for most pairs. Sometimes longer, sometimes a bit slower. But whatever setup you're trying to trade, you need to be aware of this dynamic, yes? Now, allow me to explain the opposite scenario also. So what we see sometimes is that, and obviously the chart doesn't fit that anymore here. Let me just remove a little bit. Sorry for that. Let's get rid of that. So let's say that, and that was the other example I was sent. I should comment on to make this really clear. What we often see with squeezes is that they are actually existing and they go on, all right? They may not always be completely fueled by the latest money flow, but the squeeze mode is still valid. So let me be very clear about that. So we see, for example, there's the squeeze mode, yeah? Boom. Okay, may die a little bit here and there, but actually it continues, yeah? Goes up a little bit, goes down a little bit, So understand that in such a scenario like here, right, where we had the longies leaving the market and shorties actually being on the short side, which is represented by the red line being above the green line, if it would be the other way around, and longies would dominate on the dumb money side, this would be the green line and this would be the red line, and the price would go down. You understand? Just understand the falling point, please, in this context. So we have an up move, we have a trend, all right? It may have different types of momentum. But even here, this squeeze is still ongoing, yeah? As you can see by the difference, there's still many more shorties in the market than longies, all right? Understand that. So that means here we still have some kind of squeeze mode going on. And by the way, if some longies come in here, they are within the dumb money tolerance, so they are even allowed to win a bit. Alright, these are the moments where you need to be careful. You can't just read the latest dumb money flow, alright? You can't be too simplistic. You need to understand what's the market mode, as it's explained in the video course, by the way, in detail. And then you know, okay, what's the dumb money tolerance and how to evaluate the latest dumb money flow coming in as we speak. Those longies are within the dumb money tolerance. Overall, the dumb money is short, not long. So that's why often these little longies are allowed to win. Okay, and you shouldn't try to sell, okay, in such a scenario, right? I've explained that before. It's not really new information. I'm just, reiterating that here. Okay? Understand that. Now, even if we have like a bit of a downward slope, it doesn't mean that the squeeze completely dies neither. Okay? That's also important. It may take a breather or go flat, but if again after this little downward slope, shorties come in like you see here, yes, those ones, those are fueling PBs. They are fueling the squeeze again, and look, they lead to an upward sloping squeeze line again. So what happens? Boom, the price goes up again, right? So this uptrend, like we saw last week in euro yen and pound yen and pound dollar even and euro dollar, okay, we had shorties, a squeeze, and then again shorties coming in, fueling the squeeze, and again up move exaggerated. By the way, I can even need two gaps sometimes at the weekend in the squeeze direction, never the opposite direction, as a little footnote. But gaps have become more and more rare because there's no reason why the smart money should do such a dramatic move. They just make money every day like this, so squeezes have become rare in Forex, by the way. Okay, I don't want to get too much of a tangent here, and I've explained a lot already, but okay, so this is a little bit of a summary, a reiteration of the known concepts, the known setups, and okay, just be aware of these things, all right? Understand where we are on the forward chart. Is this a squeeze mode, or is it a, so is like on the forward chart, yeah, we see this as a failed reversal, okay? Remember, so let's say this is the forward chart and this is a channel, and the price is at the channel, and let's say in this scenario here, we have more shorties coming in here. All right, kaboom. So what do we see? We have the squeeze plus new shorties. We do not have a proper dumb money switch. So this leads to a failed reversal with the price going up. All right, not a fall reversal. Yeah, because for the fall reversal, we would need a downward sloping squeeze line. You understand? Like here, the price will go up. Only if the squeeze line would have gone like this and a little collapse, then the price would have performed a fall reversal down. All right? Okay, nice one. I hope you liked this one. If you liked my explanation, leave me a like, please leave me a comment, and if you have questions, also put it in the comment section. But I think maybe that clarifies also a lot for the people who have sent those two questions. Lots of love, have a great weekend, and have a great trading week. Stay safe.